What is going on, Alpha Hunters? It is a very terrific Thursday, especially if you did not listen to me on Tuesday or going into the Fed talk Wednesday afternoon because they pulled a shocker. Fed pulled a shocker. I actually thought about making a video about this yesterday afternoon, but I figured I'd just wait till today. I usually don't make videos on Fed Day just because I want to see all the market reaction, that kind of stuff. So it's kind of like I get it out, and it's like the market completely reverses and does something different. So that's why I typically don't get a video out on that Wednesday. But we got a pretty good understanding of what was going on shortly after. I mean, after we got the Fed reaction. So you can see here as we came into it, we got a very strong pop. And the most important thing wasn't the Fed decision to raise interest rates or lower interest rates or anything. It, we knew it was going to be a hold. It was like a 99% probability, which if the market thinks it's a 99% probability, it's a 100% probability. The market ever that strong feels that strongly about something, it's like 100% probability. So, which I guess I kind of get it, right? There's not much difference between 99 and 100%. But the more I guess shocking thing, right? The shocking thing that happened was the Fed did not, and there was even bulls. Many bears expected them to kind of be a little bit more hawkish, especially in the back half of the year. You know, I think back in December when we last got the dot plot, which is the Fed's expected path for like basically where they think the interest rates would go, their projected path for cutting or raising the Fed funds. Uh, back in December, they told us, yeah, we expect 3 cuts by the end of 2024. Well, this meeting, a lot of people, pretty much all the bears, and then there was a lot of bulls out there. I mean, a lot of bulls. We kind of expected them to be a little bit more hawkish, basically saying probably not non-committal to 3 cuts, maybe saying, hey, you know what, maybe we'll have 2, or maybe taking it off saying, hey, you know what, we're going to see how inflation kind of goes. We're not going to commit to any kind of rate cuts. We'll see how inflation goes. Anyways, a lot of people were expecting that kind of narrative. We didn't get that. What we got was they said, no, we think we're still on path to get 3 rate cuts. And you saw what the market did yesterday afternoon. We had a very strong initial pop, and then we kind of had a little bit of a pullback as we go into the press conference, and then it just kind of ripped even more as became clear what the Fed why they left it at the possibility of 3 rate cuts in the second half of the year. So yeah, it was a very bullish day there in the afternoon. Nice pop here today, up 0.5% on the SPY. But I haven't really gone anywhere. It's been mostly flat. I mean, in the grand scheme of things, for how big this chart is, we've had a little bit of a move higher in the day. It kind of looks like it probably due for a pullback. That's about all I got. But yeah, that Fed shocker, man, that really kind of got to people. And honestly, to me, I think I think the Fed, the market, the politicians, investors, I think everybody's drunk on debt. And I think that's going to continue to just percolate. And I'm going to stand by I think it's going to come down to 2 things. It's going to come down to unemployment and or yields. And we'll get into yields a little bit later. The Qs obviously had a really strong day yesterday afternoon. Don't really need to talk about that. Nice gap up here. 1.15% on a gap up here on the Qs today. You can see a nice little rollover here for the past couple of hours. Okay, I mean, that's Qs currently up about 0.7%. Not everything's bright in Qs land, though. We'll talk about AAPL here in a little bit. IWM had very strong pop yesterday afternoon. Very, very strong. See, from basically the start here to the close, I mean, it moved up almost 2%. We moved up 1.9%. A little bit of a gap up here. You can see it's actually doing pretty good during the day. But we did gap up roughly 0.5% there. It has kind of nice little trend to start the day. Had a little bit of a pullback. Kind of been flat here the past couple hours. Not really too much going on there. On the IWM, the DIA, Dow Jones Industrial Average, they obviously had a pretty good day yesterday. Nice gap up, 0.35% higher. Nice trend higher for the first hour, sideways, flat, pretty much since. Same kind of deal there with the RSP. Nice gap up, traded higher. It's been sideways past couple hours. So you can see here the RSP looking pretty good here. This double top kind of formation did not hold. Obviously that was clear yesterday as we kind of kept pushing higher. And there you go. Yep. RSP kind of checked back into that 20 daily EMA. And looks like it's going to continue higher for now. DIA, yeah, was struggle busting for much of the past few weeks. Looking pretty good. Kind of got some support levels. Less separation between the 10 and 20 and the 50 here. So, yeah, might make a decent run here. IWM, very bullish, man. Yeah, very bullish yesterday. Not too bad. I mean, it's looking pretty good. I mean, it is looking pretty good. The Qs though up currently 0.75%. What's interesting here on the Qs was how much we gapped up today. Definitely kind of weak. I mean, I'm not gonna say another shocking development, but I was kind of surprised that we gapped up that much today. We've held up pretty good, but yeah, I mean, it just is what it is. The SPY currently up 0.5%, looking pretty good. I mean, not much else to say there. So let's talk about some big ones. Oh, AAPL. Let's take a look at this intraday. Look at this. Look at this fall. I mean, we had a nice gap down here on AAPL, down 0.9%. And it just traded lower there for the first hour and a half. Kind of got flat, and it has recently broke down the past 15, 20 minutes. Looking pretty brutal, man. Nice. So, what's really going on here with AAPL? Well, this is an article from a few days ago, and this is kind of something I've kind of mentioned before on AAPL. Apple without AI looks more like Coca-Cola than high-tech growth. Yeah, I've been saying this for a couple of years. I don't know where their growth comes from. Like, I get it. A lot of people talk about services, and it's like, that is their growth area, but it is not high growth. Okay, that's the one thing I will say about AAPL. They don't really have high growth areas. They aren't growing a cloud business like Amazon and Apple, especially those two have been over the past decade, and they continue to do that. They're not into AI. They are trying to get into. They canceled their car project. They are shifting those people that were working on the car project over to their AI group, which I don't even know if they had an AI group until maybe they did that. They acquired some Canadian AI company to integrate into their AI group. So that just kind of even goes to show that they didn't really have an AI group because they got to acquire a group to do that. And then even a report came out last year that they were caught flat-footed and about this whole procedural generation AI stuff that really kind of took over last year once NVIDIA introduced its H100 chips. The big one today, though, this is the big one. This is the biggin. Why Apple is sucking so much today. Department of Justice sues Apple over iPhone monopoly and landmark antitrust case. I have not read this article, but I saw this article this morning and probably should have. That way we can talk about it. But I don't really like to talk about stuff like this too much because it's, I like to look more at charts and price and stuff like that because that's really what we trade. But as far as like what's going on today, why is Apple down 4.25% when the market's up about 0.5%? That is why. So be curious to see that. I will put here. Let me. Is this article free or is it just? Yeah. Okay. I will drop that in the chat there for you guys. Y'all can take a look at that and read that. But yeah, that is a big one, man. That is a monster. You can see, and Apple's been having issues in Europe, in the EU with some stuff like their Apple Store. They had to make a deal over there with the Apple Store. Obviously, they had to, I believe, they can no longer use the lightning jack. I believe their lightning bolt. I don't use an Apple phone. Sorry, they don't use they had to convert their charging ports on all new products, and it wasn't just an Apple thing, but it was targeted to Apple, from lightning jack to USB-C charging ports. So there's been a lot of things not going right for Apple here over the past couple of years. And all of those things, like, they make a lot of money on selling like a lot of those peripheral types things, that it it's all that little stuff that keeps eating away at Apple's profitability. And I'll be curious to see what the DOJ says. I'll read that after get off here, but oof, oh my goodness. All right, so taking a look at the VIX. I'm not going to look through any more stocks. I'd imagine a lot of the semiconductors are doing good. But the VIX finally broke this uptrend. Okay, I will, for now, put it right here. I mean, this doesn't really mean anything. I'll just delete it. That doesn't mean anything. I mean, we just had the VIX actually drop off very sharply here over the past couple of days. Broke that uptrend that it's been going for several months now. But, yeah, the VIX pretty low levels. Kind of makes sense. Still hasn't gotten back down. Hold on. Yeah, it still hasn't gotten back down to the lows that we put in back in December. But we are making all-time highs. It's kind of interesting. Dollar getting very strong follow-through bounce today. Look at that move on the dollar. Wow. Yeah, we were kind of watching this live yesterday, and dollar was just getting smoked once we got the Fed interest rate decision there. So, yeah, that's a brutal one. That is a brutal move there yesterday. But man, if you're a dollar bull, man, you got to really like that bounce back today. That looks very good. Very, very strong there. Gold. Yeah, I mean, gold was pretty good yesterday. Dollar was getting hit pretty good in the afternoon. But you can see dollar bounced back today. Gold coming back down a little bit. Let's see what the futures kind of give us a little. Ooh, man, look at that huge upper wick there. Yeah, I mean, I would still just any kind of pullbacks, I would still be buying on any dips. The once it gets into running bullish, I would let it run bullish. I wouldn't really want to be aggressively chasing it. You definitely could, maybe like on the start of a breakout, but once it starts to run, I would just let it run and see kind of where it gets to, and then kind of where it starts to set up for the next push, that kind of stuff. But 10-year yields, nice little lower wick again coming in 2 days in a row. Funny. In a row, anyways. Coming in here. So yeah, we had that huge drop yesterday. Remember, we got the Fed interest rate decision. Kind of got squirrely there, and then we saw a little bit of a lower trade in the afternoon. Kind of ended off the highs as the Fed was talking. But yeah, you can see this morning, I mean, we got yields that really pop. Looking somewhat decent. Not exactly rolling over. Looking like they want to, like they're getting supported by the moving averages. Maybe we'll see them push higher here towards the beginning of next week. Maybe tomorrow. But I would expect probably more at the beginning of next week. 10-2 inversion. We saw a pretty good move here on the 10-2 inversion yesterday. Okay, I mean, if we're starting to push higher, it kind of makes sense. We've been talking about this consolidation area, this pullback area that we've kind of been into here for the past couple of weeks. I kind of thought we would push up maybe more like in the April timeframe, and maybe we will. Maybe we'll pull back here on the 10-2 inversion. Maybe we'll start to, push higher as we go into April. But that looks pretty good. That we're gonna start moving higher here on the 10-2 inversion. HYG down a little bit, kind of still in the sideways range. Finally got over this like 77.5 area again. We had two upper wicks before. Has a hard time holding above it, but held above it here the past day or two. Most likely we'll close above it again today. Got up to the upper ends of this past few months back in December, January. Has not broke those highs, so we're still just kind of in the sideways range. I know the 50 EMA is kind of pushing it up, having higher lows at that 50 EMA level. So maybe we'll see the HYG continue to push higher. Time will tell. LQD, yeah, I mean it's not really doing a whole lot. It's not really doing a whole lot. How's the TLT doing? TLT's kind of flat. Yeah, that's the thing. Is like the TLT doesn't look all that bullish, and yields, the 10-year yields, kind of look like they're bullish. So I mean, maybe we'll see the TLT maybe drop off here over the next week, which LQD HYG probably would eventually follow suit, but yeah, it's not looking super fantastic there. So I'm going to take sector rotation real quick from yesterday, right before we got the Fed interest rate decision. And we can see that utilities basically been the biggest underperformer. They're up, a little bit, about 0.4%, so not even 0.5% higher. Staples up, but definitely underperforming. Energy's underperforming. Healthcare, materials, real estate, communications, barely underperforming there. Tech outperforming, but man, you can really see here over the past 30 minutes, they have really kind of dropped off there. Discretionaries, industrials, and financials all have done very well since we got that Fed interest rate decision. So there you go. That's kind of how it's been since the Fed kind of talk, I guess. As far as today, industrials, financials, and discretionaries are the outperforming sectors. Looking pretty good there. Energies in line kind of with the market there. Healthcare, materials, staples, utilities, tech. Yeah, there's that 30-minute sell-off there in tech. And then real estate underperforming, and communications kind of at the lower end of the day. As far as the intraday, how's the intraday going? Well, industrials are doing pretty good. They're holding up there. Staples also doing pretty well, pretty good. Energies, healthcare, financials, materials. Okay, discretionaries, utilities. Utilities look like they're clawing back, trying to maintain relevance, I guess. Real estate, communications, and yeah, tech, biggest underperformer. You wouldn't think it by the cues, but remember, AAPL is in XLK, and that is probably seeing a big underperformance during the day. Because remember, they opened down about 0.9%, and they have traded down to over 4% negative. So yeah, ouch.